Hello, welcome everyone. I am Sarah Snell Cooke, your host here at the Credit Connection. I'm joined by no other than Bo McDonald. Welcome.
Thank you very much. It's been a long time. It's good to see you.
It is. I think you had a giant old beard last time I saw you.
Yeah, we won't talk about that story on this podcast.
Okay. Okay, but no more glitter in it. Okay, so Bo McDonald, CEO of your marketing company and also founder. Why don't you do a little more introduction of yourself and the company?
Sure. This is the depressing part when I now say things like, we've been going at this for 18 years. I
Yeah.
thought when I said 10 years, I started feeling old. Now I'm saying things like 18 and almost 20. And
Yeah.
we work with about 30 credit unions around the country. We do their outsourced marketing. We're like a VP of marketing with an entire marketing team surrounding them. So when a small credit union has limited resources, we kind of fill that void and give them what they wouldn't be able to afford otherwise in terms of strategy and creative.
Yeah, yeah, for sure. And so you talked a little about marketing, but or mostly about marketing, but you also do a lot of strategic work as well. And we're going to talk about marketing as a strategic element at a
As we
credit union,
should.
as we should. So I think it's really poignant now because of the timing. We'll get to it later, but marketing budgets are often the first things to get cut in credit union land. So, but we're going to start at more of a strategic level and working from like talk about how because I know you do some strategic planning with
Mhm.
credit unions and how marketing and branding fits in that strategy.
Oh gosh, where to even start? I could go on. You just opened and wound me up, and I could go for 3 hours on this. I know we don't have that much time.
You got maybe
Um,
10 minutes at max.
all right, I'll keep it short. So if you were a new client coming in, I would say, what is your brand? It's one of the things we do in onboarding, and a lot of times there is no answer to that. The
Mhm.
answer is we have good rates and good service, and that's not really a brand. So we really start from the beginning as though it's a brand new company, a brand new credit union, and we try to figure out who is the ideal member. It starts there, understanding who you serve and not just treating them like a deer we're going to go hunt, but treating them like a human. What problems do they have? What's keeping them up at night? And how can we as a credit union solve that problem for them? And that's easier said than done. That gets into the branding. We know our ideal member, we know their problem. So we've kind of made this niche. But then you can start talking to them. You can turn that marketing faucet on and say, all right, I know Sarah has this financial issue in her life. We can talk to her. But if Sarah's never heard of this credit union, there's going to be a lack of trust. There's going to be, it's just another noisy ad. And that's where branding comes in. Who is this credit union? What do we stand for? What do we look like? Our Ty Thornhill, who's our VP of research, he's a big stickler on marketing is everything. In a lot of
Mhm.
team meetings, he'll say marketing is, and if you've been with us any amount of time, you say everything. It's what the branch smells like when you walk in. It's the experience when you apply for a loan. So I could go any 20 different directions with what is a credit union brand because branding is marketing, marketing is everything. And I don't think
Mhm.
we look at that as credit unions very often. We just look at, okay, we need loans, let's get a loan promotion out there. Or we're down on members, let's do a membership drive and offer everyone $50. And then at the end of it, like, well, damn it, marketing doesn't work. But
Mhm.
we didn't really put a lot of effort into answering the question, what is the problem we need to solve? If you say we need members or we need loans, I always start with, why aren't we getting members? Why aren't we getting
Mhm.
loans? And if we can drill into what is the actual problem we need to solve, typically it's not a marketing problem. There's something else going on. And then if we fix that, marketing can really come alongside that and be even better.
Yeah, because if you go to make a mortgage loan and then sit quiet for that 2 weeks or whatever, while the member just waits and waits and doesn't hear
Yeah.
anything from you, that's scary. And it can break trust. Like you were alluding to, trust being essential. And if you have that brand out there consistently and constantly, then that also helps to create more efficient marketing.
Yeah. And what are you saying in that marketing? And is what you're saying connecting? I was recently
Mm.
sitting with a client and they weren't growing loans, but they weren't growing members, but they were growing loans. I'm like, Something's not connecting here because we've got a pretty healthy digital budget. The numbers look really good, which I know doesn't mean a damn thing if you're not growing loans, but it helped us identify there's a disconnect somewhere. It turns out every loan application that was coming into the credit union that was not a member was being set aside in this queue because they weren't really a member. So as marketing is saying this thing, we're here to help you and help you financially, the warm and fuzzy, and the credit union is really good at that. But then when you say, okay, I'll trust you, I'll do that thing, and you never hear back, or it takes you 3 or 4 days to hear back, there's another link in broken trust, and that's hard to recover from.
Yeah. And marketing is
Everything.
everything.
Ty would be so proud of you right now.
The and it's so important that it be part of your strategy and that you have a high level person or outsourced agency to talk to you about, well, how does this trickle down into member service? How does this trickle down into HR and training and that sort of thing? Because I know you guys, like you said, you dig deeper than the surface level to find out what's actually going on.
Yeah. A good brand guide really helps with that. We're
Mhm.
visiting a lot of those with our legacy clients now, knowing a lot has changed. So let's take a look at this and start fresh. And that brand guide that we're recreating really walks through what is our brand, what does it look like? Here's our logo, here's how to use our logo, here's the words to say, all that based on who they are. But then the piece of that brand guide also says, what does it look like in the branch? Because that's critical to get in front of your frontline staff, in front of your lenders. That marketing message here, this is what our brand is all about. If those folks that are interacting with members, if they don't know that brand, if they don't understand it, there's a huge disconnect. And that's,
Mhm.
that's that line you want to flow through, that funnel of member hears about you, they consider you, they ask for your help. And what happens from there? Marketing is everything. We can't control a lot of that. So that's where a good
Right.
partnership comes in to understand what's happening in the credit union. Let's look at honestly what's going on and troubleshoot that.
Yeah, for sure. So, as we know, as we have observed, I want to cry. Marketing tends to be the first thing cut when times get tough. And what are your thoughts on that? I'm just going to throw it out there.
I'm a marketer. Keep spending money, man. Don't
Hell
take away my
yeah.
budget. But you can look at the data. I'm a data person. What are the facts? Sure, it's easy to say don't cut my budget. We have to market. But when you're talking to a CFO, that falls on deaf ears. The
Mhm.
CFO, just like we in marketing have a job, the CFO has a job. There's a budget we have to meet, which means we have to work together. And if we're just protecting each of our own, he's protecting the budget, I'm protecting marketing, nothing's ever going to get done. So when we start getting at economic times like this, and the first thing is, well, let's cut the marketing budget. That'll be easy. Look at the repercussions of that. You can look at so many studies back through the early 1900s, 50, 100-year studies, the cereal thing. I won't go into all of that right now, but if you look up the value of marketing with cereal companies in the 1930s through about the 1980s, you'll see two different cereal brands, and one pulled back on their marketing when things got tough, and the other doubled down on that. And the one that doubled down on it was second in line for the brand. They leapfrogged right over the other one over a course of about 5 to 10 years because it wasn't just about them spending money, it was about them branding. And they were the voice that was heard the loudest. They were the voice that was heard the most. When someone went to the store, they remembered that. And that's the cereal they bought.
Yeah. And that's so important because branding doesn't necessarily have a direct correlation to data, I suppose. It is more quantitative or qualitative, excuse me. But there are ways to look at creating more efficient marketing, more efficient with your budget.
Yep.
And part of that is having a strong brand to that's constantly out there.
Yep.
But yeah, can you talk a little more about, yes, we don't want them to cut our marketing budgets, but what can we do to be more efficient to improve the ROI?
Yeah. I mean, that's a good thing to do every single month when you're looking at the marketing report. We take a different approach to ROI. It's easy to say A plus B equals C. What did we spend? What did we get? And what are the long-term results? But we go beyond marketing because marketing is everything. We take a lot of data from our credit unions every month, as much as they will give us. We marry it with clicks, impressions, all of our data on the marketing side. And then we start to put the narrative together of what's happening. So, for example, a great example of that, credit union has been killing it with mortgage loans. They're
Mhm.
about 10% ahead of where they budgeted to be with lending, which is a great place to be. Ended up being in mortgages, which is great, but we saw car loans starting to pull back. And
Mhm.
we could have looked at the line item, but you really don't. You just look at loan growth and say, cool, we're growing loans. When we mirrored all of that data together, we started seeing insight. Okay, we need to start shifting over here because at some point rates go up, something happens in the housing market, that house of cards could fall and we have no backup. So from the marketing standpoint, constantly looking at where are we spending money, what's working, what's not, and it's reading between the lines is where you can find some really valuable information to drive the value in marketing.
I know a lot of credit unions are very involved in indirect lending. How are credit unions growing organically? What are the trends you're seeing?
The trends are they're not. I don't want to be the bearer of bad news, but I'll just call it what it is. It's something I've written a few articles about. It's something we're looking at. There's a false positive out there right now. When you look at certain numbers, loan growth, ROA, net income, they look really good for a lot of credit unions. But there's one number that we're not looking at, and that's membership growth. And that's on the decline.
Yeah, see credit union under $1 billion just about.
It's negative.
Yeah.
So that's a problem. We can talk about how branding solves that, but true growth is not happening right now.
Mm,
Indirect is, I'm not a fan of indirect, but indirect is a tool. And a lot of people
mm,
use that as a sole source of growth instead of just a tool on the balance sheet.
right. And I mean, in economies where delinquencies are rising, you're particularly probably going to see that in your indirect lending too.
Yeah.
So how much growth is that really?
And that's
Whereas you
where a lot of
could,
credit unions win. You've got that relationship with the member time and time again. If
Mhm.
you're a student of Rex Johnson, you have a risky loan out there. And if you have that relationship, a good chance you're going to get paid. Direct, zero relationship. That financial situation goes south, and
Mhm.
you're probably on the hook for that.
For sure. And so seriously, how among your clients, because you know they're growing now, what are the credit unions that are successful? What are they doing?
I'm a huge data nerd, and I'll look at everything, and I can go down a rabbit hole, and sometimes I just have to stop myself. But the
Mhm.
commonality is an intentional CEO, intentional leadership. The credit union CEOs who have goals stay focused on that, hold their teams accountable to doing what they should be doing to meet those goals. Mission is important. Not only is accountability important with the CEO, but being mission focused, not just chasing asset growth, but knowing who we serve in the community, who needs the help. It's a focused CEO.
Mhm.
The ones that are chasing, we need loan growth, we need membership growth, and every quarter we're shifting, and there's not really an ideal member to serve, they're not growing. The ones that are slow and steady every quarter, it's a focused CEO that understands what the word accountability means.
And I think too that kind of gets back to that the brand and currently it's approximately, according to some industry research I read, about $500 to add a new member.
Yeah. You can say anywhere from 3 to 700 are the
Yeah,
numbers.
I split
Yeah.
the middle. But yeah, so obviously that is a number you want to make more efficient. And how can branding play into actual member growth? Because that really is something that 90% of credit unions are struggling with.
It's simply just making it a priority. It's very difficult. Exactly what you said. When we look at the marketing budget and we spend some dollars on branding, it's really hard to show what the ROI is. But I can point to our credit unions that have a strong brand within the community they serve. And you talk about growth, they're growing. No different than someone walking up to you at a bar saying, hey, you want to go home with me? That's the equivalent of a lot of marketing for credit unions right now. Hey, you want to
Thank
get
you
a
for
car
that
loan
image.
from me? And as all the HRQ sellers are like, hey, maybe we should visit these guys. No, just picture that. Someone walks up to you at a bar and says, hey, you want to go home with me? That's what a lot of credit union marketing is right now. Hey, you want to
Hmm.
get an auto loan from me? I know nothing about you.
Exactly. Yep.
And you can hook someone on rate, which I don't think is very efficient unless you're just strictly going after A and B credit. The branding, I think, does that job at the top of the funnel so that someone doesn't have to go to search. If you're efficiently branding the credit union and you're at the top of mind, I've always said our job in branding is to make people think of you first and like you the best when there's a need. So they don't have to go to Google and search cheap auto loan in whatever city you live in.
Yeah.
It's, gosh, I'm not going to put another cent in this car. Hey, I heard about this place that they seem fair. They're talking my language. I feel comfortable with them. Let me go see if they can help me. Because I don't think I'm
Mm-hmm.
going to get approved, but there's some sort of comfort there. And I think
Mm-hmm.
that's where branding comes in, whether it's you get pissed at your bank and I'm going to go find a checking account. I've heard of these guys. You need a car, time to buy a house. If you can be inside their heads rent free when they need you,
Yeah.
that's a whole lot better place than competing when someone has to go search for it.
Yeah. And I think too, credit unions have had trouble for many, many reasons, storytelling, like real storytelling.
Yeah.
And at the end of the day, anybody can beat you on rate. Anybody can beat you because of your mobile app because they can buy the same one from the same vendor.
Yeah.
The only thing you have to differentiate yourselves is brand. And so, how do we make that happen industry wide? We're going to solve all of the problems industry wide.
I think it depends on scale. As a billion-dollar credit union, you have a lot more flexibility. One, you have a bigger budget. You're throwing your name on a stadium. You've got billboards up all over town. You can compete on quantity. $100 million credit union is a very different approach. We don't have the budget to go slap our name on a stadium to buy a dozen billboards in town. But the $100 million credit union is still kind of stuck in that, well, they're going to come to us because we're good people. And it's it's not wrong, but we haven't gotten past the days of the seg relationship where they took you by the hand, walk you into the HR office and say, we're going to open your account here at the credit union. We didn't have to work for it.
Right.
And we still kind of assume people are just going to walk through the door because we're nice people. And we haven't evolved into having to go out and hunt for our food and, as Dave Ramsey would say, knock it over the head and drag it back to the cave and eat it.
There's another image to take in. And so, what are there some tactics? Are there some strategies that help credit union that hasn't been doing this, that hasn't been telling their story out in the community? I mean, and you made a good point a minute earlier too. It's digitally. I know I've done a project before where I was looking up these 36 credit unions, looking for their community at work. And we knew the group I was working with, we knew they did community impact work. And fully six of them, nothing on their website, nothing in their social media. I had to Google them. And then the only thing that came up was robberies and from, so there is that digital brand that we also have to be aware of too. But yeah, how do we be more efficient or about all of this?
Efficient and strategic. That's the piece that gets lost. It's the piece that I think a lot of smaller credit unions, I'll say under 250, struggle with. They have a marketing person, and that marketing person may be a bang up graphic designer. They might be a great social media person, a great community development person, but they have a skill set. And whatever skill set they have is where the credit union excels, but everything else is kind of left to wither on the vine. And
Hmm.
I think that's where I like our model, where we have a little bit of everything. I'm not pimping that, but it's the gap that a lot of credit unions have. They have a
Right.
skill set, and and that's where they go.
Yeah.
So the things you're talking about, how do we tell our story? When we're out in the community and we're doing this great thing, it never makes it onto social media because it's not on anyone's priority list.
Right. And sometimes it's the CEO themselves doing all the marketing too. That could be
Yes.
they've got a million things to think of, especially at a smaller shop, because they're also the backup loan officer.
And teller and janitor and
For sure. So, I always allow my guests to have the final thoughts, Bo.
Yeah, I think it starts with removing fear. A lot of the things we talked about are new, they're different, they're uncomfortable when they're brought up as a strategy, as something that costs money, as something that's different. A lot of times it's no, we can't do that. Fill in the blank why we can't do it. There's a million reasons, but a lot of it comes down to fear. It's something new. I don't know about it, so I'm just going to say no. Let's keep doing this thing. So there's a lot of
Mhm.
cool technology out there. And I'm looking at you credit unions with capital sitting over 15%. If I hear any of you say I can't afford it, I'm going to come after you and we're going to have a
Serious talk.
I sit in
Serious
strategic planning
talking to.
sessions and I threaten board members to throw them out the window. The first one of you that says we can't afford it, you got to invest. There's a lot of stuff out there that
Hmm.
can help you. There's a lot of crap out there too, but there's a lot of, I think of, I'm going to throw out Service Star Consulting. A lot of our credit unions with that front line connecting the marketing message to what do we say, what do we do when a member's in front of us? Vertus AI is a recent group we've started working with where when we talk about ROI, holy
Hmm.
cow, can we get ROI and can we do so much more with that? And yes, it costs money, but if you look at, okay, if you're spending $2,000 a month for this tool, in reality, how many loans is it going to take to just cover the cost of that? And my guess is if you're actually utilizing that tool, it's going to be a profitable. Branding is the foundation, the baseline. You've got to do that. But you think about marketing, and marketing is everything. And we just do a poor job of being holistic.
Hmm.
That is credit unions.
Yeah, I agree. Thank you so much for your time, Bo. Appreciate it.
It's been fun catching up. Thanks for having me.
Yes.